Hello, so as we can see that the US dollar index chart is facing mounting pressure after the weak labor data, increasing Fed rate cut expectations alongside after it has retested the 120 critical resistance on the chart. And from the other side, we can see positive impacts or upticks on the Euro USD and the GBP USD charts, yet those also might be limited as they have reached also critical resistance levels on those charts. Now starting from the Euro dollar chart, we can see that it reached the 116 resistance alongside the 3-day relative strength index indicator, also pulling back slightly from the 50 barrier from below. So that might suggest possible another 3-leg structure down after we saw a 3-leg drop from the 2025 peaks for the euro dollar. Now, if you do manage to have a clean hold below 114.50, that might extend possible losses towards key levels I have in sight here, which is the 113.80, the 112, and possibly back in extreme scenario back towards the 111 mark. From the upside, if we do manage to have a clean hold above the 116 mark, we might be extending bullish forecasts back in the direction of the 2025 peaks with key levels inside between the 116.80, 117.70 before confirming new 2025 records. Now, with respect to the British pound chart, it's also leaning towards a possible bearish structure as the price action is still trading below the key trend line that connects the consecutive peaks between July 2023 and September 2024. And we also have a possible head and shoulders formation in play. Now, we also have possible drivers for the current chart towards the bearish inclination with respect to market expectations for a 25 basis point rate cut from the Bank of England on Thursday, given the concerning economic growth outlook. Now, looking at the chart, it did manage to have a clean hold below the neckline of that respective head and shoulders formation, and it reached the first halfway target, which is the 131.40 level. If you do manage to have a clean hold below that level, you might have an extended or full potential target for potential extension for that target, possibly towards the 129.40 level, and in extreme scenarios, possibly down towards the 127.40 key level. Now, from the upside, if you do manage to have a possible recovery above the neckline of that formation or above the 133.30 level, then we might have extended bullish forecasts back in line with 2025 peaks with key levels inside between the 136 and the 138 levels respectively.